for the past week, the past 5 sessions, is this a cost building, or is it some sort of the failure out from the Wyckoff spring? Because last week, if you remember, I talked about the Wyckoff spring. We probably see a temporary bottom. So let me just zoom in this chart and let's just refresh this. So that is the Wyckoff spring that I talked about last Sunday. Yeah, so there's last Sunday, and for the past 5 days trading session, 1, 2, 3, 4, 5, is very much in a trading range, slightly forming a higher low. So what does it really mean? So if we really get a Wyckoff spring here, what we would like to see for at least some sort of the short-term upswing like this is definitely to have a test of this axis line. So 4450 to about maybe 4500. So this is the area that it should really get tested. So in order for the spring to become a valid structure, or if the market is mercy or lenient, then I think it could just come to this level about 4600, which is the previous high. So 4550 to about 4600 is another level. So right now, right after the spring, it just sort of struggled to go up. However, if we really want to analyze the structure, so this is the trading range. So let's just go into the hourly time frame. So hourly time frame, if you look into that, I don't think it's that bearish, but certainly is not as bullish as I thought last week, because last week I thought about since we get Wyckoff spring and then confirmation, and then we got a test gap down followed by a quick recovery. Probably right at this point, I'm hoping for a breakout here. So followed by some sort of the push up to test the resistance ahead. But for the next few days, like the 3 or 4 trading sessions, we just getting this sort of the trading range. So this is not so bullish because I don't really see any upside follow through. However, if we really zoom into this trading range in the hourly time frame, then what we have here is just a trading range, and we got slightly higher low here. So we got a low, we got slightly higher low here. So in terms of the volume, so if we look at the daily chart here, what we have here for the past 5 trading days is sort of like decreasing slightly. But on Friday, we got a bit of the spike of the volume, but we got a demand tail here. So that certainly is the presence of the demand. So overall, I will still put slight bullish bias to this trading range. However, in order for the bullish scenario to materialize, then certainly 4400 is the key level. So you definitely would like S&P 500 to break above 4400 and come in above, followed by a push up. However, in case this is a failure, so means that instead of having a Wyckoff spring followed by confirmation and then going up, then it sort of just fail right at this trading range, which is still possible because the news just drive the price at the moment. Especially the war is still ongoing, like we have Saturday and Sunday today, and on Monday we definitely will get maybe some sort of the price action. Maybe it's a gap down or maybe some sort of a gap up. So it's just need to see how it actually reacts, because right now if it really fails here, how would it look like? So this is a trading range. If we get a failure here, could this be a sign of weakness? So if we just check out the characteristics of the price, I mean, this is probably slightly more volatile than the previous reaction, and then inability to rally. However, in order for it to have some sort of the confirmation, the support needs to be broken, like 4270. So this is the support level that you need to break. So we can expect some form of the breakdown. So a breakdown with rally, inability to rally, and then eventually it will just go down to test the low or even lower, break below 41. So this is the failure case that we could expect. So, but first it needs to show some commitment below 4270. So that is the failure case. But right now, my bias is still slightly to the upside because of the trading range. Like the volume profile is slightly decreasing, and it could be a cost building. Like means that this is building up some causes, and then it will just move up, or even here under the bearish sentiment, the bearish some like when we get a lot of the bad news, bearish news, then it could just move up, and then until we reach the resistance level, then there could be some selling coming in with increasing of the supply. So that could be one of the bullish case. But overall, my bias is still to the downside. So we got a sign of weakness. We got an automatic rally. That is the trading range. This likely could be a redistribution. So I still believe that we'll have more downside ahead. It's just a matter of time. So whether is right here, then we just see the failure, or we could just see another push up until right this point, then we see another wave down. So overall, this is definitely still a bearish structure. Okay. Yeah, so that's S&P 500. In terms of the rest of the index, I think is very similar to the S&P. I don't really want to spend more time into like the Dow Jones. You can see that this is a very similar structure to the S&P. Okay, so overall, it's like within the big range like this. So very similar structure, and for Nasdaq as well is similar. So we still got this trading range, but you can see that Nasdaq is actually weaker than the rest. And I think the best or the outperforming index is still this small cap Russell. But overall, from a big big long-term perspective, big picture point of view, is still looks quite bearish at the moment. So, but short term, we just want to speculate whether there's another up wave to push for another week or two, or it will just kind of fail right here and then tank